Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the breakdown attempt below Monday's RTH low of 10.5 ended up attracting responsive buyers, and we got a push back up into the 23 to 24 area. At this point, heading into the open, we have pre-market support at 17 to 19 and pre-market resistance at 23 quarter, 24 half, with the primary resistance on the day at 28 to 30. Now, in order for the market to break out beyond 28 to 30, we are going to have to see broad market strength and sustained upside momentum, with the other markets also participating in the upside move. We know that the larger pattern in this market is still supporting a bearish scenario, so we just need to see more in real time in order to take long setups, especially long setups that are at more aggressive location or in the middle of the recent range. So on the downside, we have pre-market support at 17 to 19, which is still technically a little bit more aggressive support. And if the market continues to hold above it, then it would signal some strength in the market and buyers stepping back in. But from a location perspective, 17 to 19 is a more aggressive spot. So that means we do need to see something pretty clear cut in real time in order to consider taking a long setup at 17 to 19. Because if we don't have that sustained upside momentum in the market, then we could simply be balancing in these lower prices below 28 to 30. So we do really need a lot of force and strength to break out above 28 to 30 at this point. On the downside, below 17 to 19, we have the initial support zone at 1175 to 1375 with a gap fill within that zone as well. And then Monday's RTH low at 10.5 is a reference point, and then the overnight low at 2107.75. Now, in the event that we are seeing broad market weakness and sustained downside momentum, then we could see a break below 1175 and below 10.5. And if that happens, then most likely we will go down and retest 2100 quarter to 02 quarter. So right now, because the market is in the process of developing a new trading range or a new balance area, we have to be pretty flexible with our bias on the day time frame. We know that the larger structure that's in play after Friday's balance breakdown still supports the downside and is still technically bearish, but right now the market is in a process of developing yet another range, and on the day time frame, it can put in another range-bound day before it heads lower, and we do need to see that bigger weakness come into the market and sustain downside momentum, even to get a downside move, or at least a significant downside move. So, just the understanding that on the larger time frame, when you zoom out a bit, since Friday, this has been a market that has broken down below a 2-month balance. And for those reasons, even though you can get short-term bounces, the market can still struggle at the resistance areas, and the bounces can still attract responsive sellers. So right now, on the day time frame, we do have to be very focused on the situation that's developing in real time. This is a high momentum market, which means you can get pretty decent swings on both sides. There are very good opportunities, but you do have to be very much in tune with the real-time momentum situation. And then if in real time you are seeing a lot of bearish signals, then that would be in alignment with that bigger pattern, the balance breakdown pattern. So we'll give that more weight. And at the same time, because of that larger bearish pattern, we have to see more in real time from the buyers in order to consider taking long setups. So we do need to see some pretty decent upside tick values, the AD line trending higher, the other markets holding up. We just need to see more evidence from the buyers to consider taking longs. So we're going to continue to be fairly conservative on the long side. It doesn't mean that a long setup can't develop in real time and longs are not off the table, but We just have to be a little more critical of long setups, whereas on the short side, simply having good trade location and timing the trade correctly can be enough to justify the trade idea and still allow that trade idea to work fairly well. So right now, we know the overnight session is fairly range bound. We know that buyers stepped in for a decent push higher. Now the question is, is there enough strength in the market to continue the buying and to continue pushing it higher? And for that, we're going to have to see some pretty decent strength on the day time frame and a lot of signs supporting the upside case. And absent any strong buying, the market can hold below 28 to 30. Now, in the event that we do get a break above 28 to 30, we can still attract responsive sellers at the resistance zones above, especially at 38.75 to 40.75, around 46.75 to 47.75, and then 50 half to 52 half, of course, continues to be larger time frame resistance. Same goes for 54 and 56 to 58. On the downside, if we fail to hold Monday's low or the initial support zone, and we are seeing a lot of downside momentum and broad market weakness with the AD trending lower, then, like I said, 2100 quarter to 02 quarter would be very much within range. And if we're really starting to sell off on strong downside momentum, then even 95 to 97 and 90 to 92 would not be out of the question. But as you start pushing lower into those zones, you are testing now larger time frame support, especially at 90 to 92 and below there. So you can still get some pretty decent bounces off of those areas, and responsive buyers can step in. So those are the main ideas heading into the open. Let's see, if the buyers can defend the 1175 to 1375 area, Monday's low. On the upside, 28 to 30 primary resistance, and we'll take it from there.